Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending 4/29/2016, last week of April. What I've got on the screen here, I thought we'd take a different approach this time at the E-minis. We've been following these and we've had a great run since February the 11th. I've had a lot of our members. In fact, I was encouraging all our members to go long. We had great signals and we over allocated into the energy sector. A number of things were coming together on the energy side beside the seasonals playing good right into our hands from that perspective. But we had a couple of really good key technicals that said we got to go long. Now, let's take a look at this run that we've been on. I've got a 2-hour chart up here versus a daily. I thought we'd start a little bit zoomed in here, but I've got it from the February the 11th lows down in this area right down here all the way up to where we're sitting right here. Okay, now I have up here on the screen Fibonacci's that are tied in here, and this Fibonacci here was the high that we just made just recently back about the middle of February, right in this area here. And then you can see we're sitting here and we're above. This is not a natural fib level, but it's a level that I love to use on retracements from a nice extended run. It's a area where the market tends to stop on a very aggressive bullish run, 0.236. Now a natural fib level, 0.382. And you can see the 0.36, 23.6% is right in that area there, which is where we kind of stopped. And then, it just extended it over right in this area here. So this is a key level, 2033, 2032 area. Okay, so that's a key level for us. Now, should we break that level going into next week? Remember, we're going into the first week of May. June, and July going into August traditionally get weaker and weaker, July being one of the worst statistically over the past 20 years trading months for the S&P 500. So I think everybody's expecting a little bit of a breather. Volatility has, come up a little bit in the past week or so, but I'm expecting something like that, and that's kind of how I was instructing our traders to go. One thing that you want to pay attention to, and again, as we come up and we make these new pivot highs like this, right? And we just sit here, and our new pivot lows rather, and pivot highs, you can see that, and I'm just tracing them out here where I've got, the key pivots on the screen as I mark them out like that, right? Okay, and I'm just marking them with my tool here. One thing that we just did right here with that low right there, we took out a key pivot low right there. Okay, so this was really one of the first breaks in trend that we've had in quite some time in this run up like this, and it just happened this week. Okay, just a few, in fact, yesterday and today. Now, what does that mean? I do believe that means that we can see going into May and start off possibly with a little bit of a bounce, but I think the sentiment has shifted to a sell or rally kind of mode, or at least that's the way it's been, since around since this past last week, right? This week and last week, been kind of a sell the rally kind of mode. And let's just zoom in just a little bit more. Again, staying with this chart. One thing I do want to show you though is, even from this low down here to this high up here, you can see this slow degradation in the MACDs. And you can see this low that was made right here, right down in there. We haven't been down to that low since all the way back to that pivot right here. Okay, and this one was when we first started running, and there was a lot more fear in the market off that February the 11th low down here when we had this huge signal to go long. So this tells me that any move up like that is probably going to be met with some selling, and then we're going to do one of these kind of moves like that, giving us an Elliott wave 3, 4, 5 kind of pattern on this 2-hour chart. That's where the probabilities are now. What would change that if we take out that pivot high there and we establish a new pattern? But right now it doesn't look like that. So if I zoom in just a little bit more, I want to show you something else here that I'm looking at here. And if I just, let me just blow it up just a little bit here like this so that you can see. If I put a shaded zone on this chart right here, right in this area right there like that, you'll see that there is a zone here where the markets have essentially found support and or resistance depending on which way it's attacked the market. You can see right here it was mostly resistance until we broke out here. We came down and did a retest here, but now we've done one of these kind of things like this, and then we broke it again. So an obvious measuring objective of this would be to measure from the high here to the low there, get the distance, right? Find that distance and then transpose it over here and see where it takes us. So, you know, if I wanted to do something like that, let me just blow it up just a little bit more so I can just kind of give you guys an idea right here like this. So what I would do is I would just come in here to my tool and just pick up a percentage move, come from the high to the low, and then just bring it right back down about like that there, right? And then I would just dupe the move or duplicate the move here and then just come right over here like that and put it down, right? Something like that. So that takes us down to right around 2017. Notice it puts us in between the 0.236 and the 0.38 node right there. So again, I do believe that we're going to get down in that area as we go into May. You know, we've got this Elliott Wave 3 pattern, which does suggest that, you know, we're going to get a bounce into a 4 and then come down and make a little bit lower 5 like that in a traditional 3, 4, 5 pattern. We do not have any divergences here. We've really gone a lot lower than any of these guys right here. And you can see this point right here compared to these points right here, the MACD is lower than these two guys right here. So we are, this was some solid selling. I suspect some of the selling also is in the month. We've been on a good run. We're getting ready to go into a brand new month. So I'm sure there were some folks taking profits, some big money taking profits and just moving a few things around. Now, we've had some interesting things also happen in the markets this week. Bank of Japan, you know, would probably like to do a do-over is what I'm sure they would like to do. But as far as the yen goes, but they caused the Nikkei to just, you know, really crater in the yen to go way up. There's going to be some opportunities in that. The U.S. dollar's gotten very weak this week. It's really looking like it could go even lower. We're making trades on the euro as a proxy for the U.S. dollar. We're looking at getting into the yen. Also, I've been playing silver to the upside. And there's just a number of trades that right now on the commodity side, same thing with oil, right? We've got some really interesting things in oil that I think are going to just, you know, they're hard to pass up. Now, oil has basically, let me just go, I'll show you here, we'll go take a quick look here just to give you guys an idea of some of our thinking here in our user group. But if we look at oil, you can see here oil was relatively flat today, right? And we made a new high here in oil, you know, pretty much earlier today or this morning at 46.78. I think oil is probably going to be ready for a little bit more of a slackening, a little bit of a pullback here. If I come out to the daily chart here, let's just take a look at it on the daily here real quick. You're going to see that oil is setting up here. We've had a nice run. Okay, and on the daily chart, can it go higher? Sure, it can. And as it does climb up into this area here, you can see here that if it moves up a little bit higher like this, we're going to have one of these kind of movements in the MACD. And then when the MACD crosses, there is absolutely no bearish divergence on that trade right there. So that means that any move down is probably going to be bought. So we are in a buy the dip kind of mode, not a sell the rally mode. You can see there's the 200 EMA. You can see it provided resistance there. We broke it right there. We went up. We quickly came down and did a retest, and that told me, hey, we're going higher. Okay. We're kind of getting a little bit the air is getting pretty thin up in this area here. There are a lot of longs getting into oil, but typically the people that are late to the dance are the last ones to get the actual dance. You know, all the people have been taken. So I do believe we're going to see a little bit of a weakness in oil, but it will be a chance to buy the dip. Now, we have over allocated into the energy market off that February 11th low, so we've done very well in some of the trades that we've done in the energy market. And if you're not a member of our group, we've got a lot of folks that have come in from the Asia Pacific area, Canada, the Americas, Latin American markets, and then over in the European markets. I highly encourage you to come in. We got a lot of things that we have going on, and I said at the beginning of this year it's going to be the year of currencies, going to be the year of commodities. In commodities, we've certainly seen that in oil. We've seen it clearly in the precious metals, gold and silver. So there are a lot of really great things that we have going on there. Today is just a natural pullback. Now, I will show you, we're changing some of our strategies. We're modifying a little bit of our strategies. If we look at the VIX, you can see here we very quietly moved into zone 2 of the VIX. Now, I've categorized the various zones of volatility because each zone requires a different kind of option strategy. Why? Because option premiums are based on volatility, and they're either rich or they're very thin and they're cheap. And depending on whether rich or thin is whether you want to be buying or you want to be selling. Rich option strategy requires selling strategies, whether you're bullish or bearish, and low volatility requires buying option strategies. And then there's a number of ways to leverage that. But we've just slowly egged up into a zone 2, but I started talking about that about a week or so ago. You may have seen some of my updates. So this is kind of where we're sitting here, and that sets us up nicely for the month of May, which the markets are going to start to get a little bit weaker. You may have heard of the sell in May and go away kind of theory. So that's kind of where we're sitting right now. I think we're in a sell the rally mode currently, but we've got a number of stocks that you know I've supported, that we've gotten in, that have done very well. I see some others that are coming good. Some of the traditional stocks have not done well, but we had a really good move in Amazon, and we had a really good move in Facebook, which had followed poor moves in Google and Apple and a few others. So we're seeing some really interesting moves in these markets right now. And that's kind of how I want to see this. In the treasury market, in the bond market, you will see here from a bond perspective, I think longer term, we're going to be short bonds. Near term, if we do get a little bit of weakness in May, I'm going to watch bonds very closely to see how interest rates react, okay? The central banks from Japan to China, Europe, and the U.S., they're playing fun and games. I call them reindeer games, and they're going to have a big play on just what the U.S. dollar does and what these other currencies do. So let's take a look at it and see how we can go. Meanwhile, for our members, I will see you Sunday night in our session for our weekly market watch. If you're not a member, I highly encourage you come on in and check us out. We got a lot of great things going on. We're off to a really good start in 2016. Have a good weekend, everybody, and I will see you guys later. Ciao now.